Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Bitcoin rallying past $86,000 for the first time ever, boosted by President-elect Donald Trump's embrace of digital assets and the prospect of a Congress featuring pro-crypto lawmakers. For more on the trade, we're joined by Mike Regan. He's a senior editor for Bloomberg News. He joins us here in the Bloomberg Businessweek studio. Help us make sense of the optimism here. Why exactly are bulls so excited?
Well, I think you sort of nailed it with the Trump victory. If you go back to July, when Trump really was front and center in the crypto world, he spoke at the Bitcoin 24 conference, and he made a lot of promises to the crypto community. But to me, the most important one is he has plans for what he calls a strategic stockpile of Bitcoin.
Like a strategic oil reserve for Bitcoin.
Yeah. And, and the U.S. does have other sort of strategic reserves, for different commodities over the year. I think, no one expected we'd ever be talking about a strategic reserve of Bitcoin. But in this political environment, you look at the money that was spent by the crypto lobby, their super PAC called Fair Shake, something like $130 million on congressional races. And they managed to elect pretty much most, if not all, the candidates they wanted. But
using messaging that was not at all related to crypto, we should note.
Right. But it's that money, if you put that target money into certain congressional Senate elections, it can have a big effect. Yeah. So the political mood for being sort of anti-crypto at all right now is not very high after that election. Now that, the question is, what does he mean by this Bitcoin reserve? He, the day before Trump spoke, RFK Jr. spoke and said, I heard Trump's going to announce a plan to buy 1 million Bitcoin for this reserve. Now, put that into perspective. That's $85 billion worth of Bitcoin at this price point. And Cynthia Loomis, the senator from Wyoming, actually spoke after Trump. Now, Trump fell short of that promise at his speech to the Bitcoin convention. But Cynthia Loomis, the senator from Wyoming, came after him and was basically presenting a draft of a bill that she had to do exactly that, buy 1 million Bitcoin. So, the question I think that's lingering over this market right now is, will that really happen? Is there really enough support in Congress for spending $85 billion at these prices? Tomorrow it could be $90 billion, $100 billion, depending on where these prices go over the next few years to buy crypto. Because if the market knows that the government's coming to buy, well, the sky's the limit for the price. So, will Congress really, are they influenced enough by this crypto lobby to actually go for that? I think is the big question hanging over this rally. But, clearly there's a runway of time before Trump comes in and before we really get a sense of his priorities, where this is sort of the driving theme. And it's almost impossible to find someone who's bearish on Bitcoin and crypto in general because of this sort of enthusiasm from the next administration towards crypto.
What about not just enthusiasm, but how much do we know about whether the new administration is actually going to provide a regulatory framework more than what we already have in the crypto industry and kind of promote bringing the crypto industry into the U.S.? How much of the optimism in Bitcoin's price is kind of reflecting that? There's
certainly some of that, too. Trump has promised to fire Gary Gensler and appoint crypto-friendly regulators. Now, it's an open question. A lot of legal experts think he doesn't have the power to actually just fire Gensler, but he certainly, can exert as much influence as he can to try to get him to quit or whatever. Trump often deals in sort of actions and activities that don't have a precedent. So it's hard to say exactly how far he will push the envelope on that as far as just appointing new regulators. Now, there's any number of crypto bills floating around Congress that have just kind of stalled out in the process. So I think there is a chance that we could see sort of that logjam clear even before the end of the year. There was some hope that the stablecoin bill is the big one. The crypto tokens that are worth exactly $1. They're very, very important to the market. And there's a bill floating around to sort of set the regulatory guidelines for them. That would kind of be the first one that we would look to happen. But it's kind of a blank slate now as far as what the regulatory environment will look like in the next administration. So it's a great question, and we're just going to have to stay tuned and see how it all progresses.
I'm wondering what would change the mind, in your view, of the folks who are so bullish right now. You say it's difficult to find a bear out there, given the way that the scenario has changed just in the last few days.
Yeah. To me, that question of the Bitcoin reserve is really the one that's lingering over the market. Trump has a very long agenda of things he wants to accomplish. Where that sort of making good on the promises to the crypto community, where that lands on that list of priorities, I think is the most important thing. If you get into the new year and there's a few weeks, months, and you don't hear him talking about it, or there's not really much action going on in DC to create this Bitcoin reserve, then I think people are going to start questioning. That's a big deliverable to the crypto community from Trump, and I think he's got some time. Obviously, he can't do anything until he's in office and the new Congress is seated, but where that item lands on the priority list for Trump, I think will really determine when and if this market starts to crack.
One thing that's pretty remarkable to me about the election is just how powerful the crypto lobby was.
Yeah.
In this case, especially in the sense of running ads that were not at all tied to crypto in order to elect candidates who were pro-crypto. Their record is incredible for this past election.
Right. And they've already started to fund the PAC for the midterms. This lobby, this super PAC, Fair Shake, it's not going anywhere. It's incredibly powerful. I believe that was the biggest source of corporate funding to congressional campaigns in this last election. So, memories are short. Not everyone, is really focused on the FTX days and all the blowups that we saw a few years ago.
Yeah, that's what I like. If something like that happens again, or if consumers are indeed harmed by certain projects that are out there, by certain products that are out there, then does that shift sentiment at all?
I think it could. Yeah, I think it certainly could. Knock on wood, the last trailing year or so has been, as far as crypto projects and exchanges and companies blowing up, it's been pretty smooth sailing. So I think that helps to sort of, create this atmosphere of complacency towards this market that, has a pretty volatile history. And, you ask what could change the price action. That's the thing. It's a very unpredictable market. I mean, over time, it's obviously expanded exponentially, but the price of Bitcoin has just been astounding over its history, but not without major drops and bear markets in between. So I do think a dip in price could sort of change the sentiment about how laissez-faire the government wants to be towards this whole asset class, for sure.
Mike Regan, Bloomberg News senior editor over on the crypto desk. Thanks so much for joining us on Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We've been looking forward to our next guest for quite a bit of time. It's because Peter Atwater is a go-to for us. He helps us understand how we got to a certain place and also where we're going. He's adjunct professor of economics at William & Mary. He's also the author of The Confidence Map, Charting a Path from Chaos to Clarity. That book came out last year. He's also president of Financial Insights. It says it uses a confidence-driven framework to give perspective on the financial markets and the economy. Peter, always good to have you join us. I want to use that framework, the one about confidence, to understand what happened in the U.S. last week with the resounding election of Donald Trump. How should we look at confidence as a factor there?
Sure. So going into the election, I felt that voters were going to select the candidate that addressed the vulnerability that mattered most to them. And that's a very individualized thing when confidence is low. Moreover, it favors the candidate who's not the incumbent. And so I think as a backdrop to what we've seen is this was as much a rejection of the incumbency as it was a mandate for Donald Trump.
But you also write that, I mean, typically we usually see, I guess, that pattern that the incumbent, if people are feeling confident in, what the incumbent has done, they vote for the incumbent. And if they don't, they vote in another way. But just looking at your note that you sent over, it does seem like there were some specific voters, specific types of people who were voting for Trump that had some very, I guess, particular issues in mind that they brought to the polls that maybe other people were maybe blind to.
Yeah, I mean, you have issues of immigration, you have issues of inflation. On the other hand, you have folks who feel threatened by a lot of the liberal agenda, and so what we have behind this election is an interesting composite whose interests are aligned in getting the incumbent out, and it remains to be seen, in my opinion, whether the cohesion that exists in opposing a single candidate will be able to be sustained. It feels more like a loose cooperative than it does necessarily a unified body.
Well, we do see some unification within the Republican Party right now, at least when it comes to composition in Congress. We spoke to Billy House and Stephen Dennis earlier, and they talked about, yes, there is some resistance to Trump within the Republican Party, but few and far between, at least in the House of Representatives. A little bit in the Senate, where you have some senators who actually did vote to impeach the president-elect back when he was president. That said, it does look like Republicans will maintain control of the House of Representatives. How would you advise them over the next 2 years to latch on to the lack of confidence that Americans expressed at the polls in Democrats, to use that to their advantage, to actually go through with their policies?
Yeah, I think that we spend a lot of time focused on the left-right divide. To me, the greatest issue in the United States today is the wealth gap between those at the bottom and those at the top. And so whether I was advising, a second Biden administration or the new Trump administration, this is really a time where attention needs to be paid to those at the bottom in creating a means by which moving up the capital ladder is possible.
So,
sorry, Emily, go ahead.
No, sorry, Tim. So when you think about who could be the biggest then beneficiaries of a President Trump, who comes to mind?
Well, it depends on your time perspective. I mean, today what we're seeing is that the market concluding that the biggest beneficiaries will be really part of this broad Elon Musk bro trade, as I call it, where it picks up crypto, it picks up space, Tesla. There's a lot that is involved in this broad entourage trade. What concerns me is that between now and inauguration date, everybody can fantasize about what is likely ahead. The rubber doesn't meet the road until after inauguration day. And so investors need to be careful not to front run to an enormous extreme what they foresee ahead. And from my perspective, that's exactly what's happening right now. Between regulation, taxation, the endorsement of this Elon Musk Trump partnership, their investors are counting on a very clear, unencumbered future ahead.
How much did you see that in play when it comes to prediction markets? Because it was astounding seeing how the night of the election, the prediction markets, I'm thinking of Polymarket, was basically pricing for Trump to win hours before we saw, even.
I mean, they were weeks before Polymarket.
Weeks before, yes, but especially on election night
Yeah.
too. There was a really big gap between the broader consensus and what prediction markets were saying. I'd love for you, Peter, to kind of opine on like how that comes into play and whether you are seeing, I guess, people who use Polymarket are maybe going to be people who are already more pro-Trump. Yeah,
I mean, you have a Venn diagram today of crypto, gambling, sports. There's a large overlap of participants and more importantly, confidence. And so to see that influencing the Polymarket environment doesn't surprise me. What I've been watching actually to me was a better leading indicator was the developing coil in Tesla. That if you had gone back and looked over the last 3 years, you've seen this narrowing and narrowing coil. And these are emotional tugs of war between the bulls and the bear that ultimately, when the rope gets released, the energy that is released with that moves things to one side. And so ahead of the election, you could see that when Tesla's earnings surprised and the stock popped, that the rope was already beginning to let go.
So what could actually lead to some sort of pullback right now? We're seeing really kind of exuberance everywhere, Peter.
Yeah, so this sort of exuberance dies on exhaustion, that everybody who believes in it has committed the maximum amount that they're going to commit. It's also an environment that likes round numbers, so it wouldn't surprise me to see if we get, an ascent to Bitcoin 100,000. I mean, that feels like a logical next step. Again, remember that this is an environment where it is incredibly transparent on X, what people are positioned in, where they're going, and you have to believe that institutions and others are now betting on the crowd's bets. And thanks to all of these, fast fashion ETFs, the ability to add extreme leverage into all of that is part of the appeal. This is a fast-moving gambler's game that is going to draw everybody in before it exhausts.
It's just remarkable, too, to see it play out in real time on the X platform, which, by the way, looks completely different to me now, a couple years later, Peter, than it did before Elon Musk bought it. But that's a conversation for a different day. Peter Atwater, adjunct professor of economics at William & Mary, author of The Confidence Map, Charting a Path from Chaos to Clarity, also president of Financial Insights, joining us this afternoon from Pennsylvania. This is Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Emily, I don't know if you saw this earlier, but Amazon is reportedly developing smart eyeglasses to guide its delivery drivers around and within buildings. This according to Reuters, who cited 5 people familiar with the matter. If these work, glasses would navigate drivers on a small embedded screen along routes and at each stop. The idea is that it aims to reduce delivery time. What do you think?
So, because you see it in your vision field instead of having to look onto the dashboard of the truck or onto your phone?
Or when you're walking around holding a package, you're like, okay, this is exactly the house it needs to be delivered to. Yeah, kind of a cool little... I should note, an Amazon spokesperson told Reuters it is continuously innovating to create an even safer and better delivery experience for its drivers, but it would not comment on its product roadmap.
I want to see like a prototype of what they would look like.
I think this is a real use case for smart, for like the Google Glass type thing. They've been used for quite a while. They never caught on with consumers. They're trying to make that happen at Snap and at Meta still. We'll see if it happens, but the industrial use case is certainly interesting. We got with us Ty Brady. He's chief technologist for robotics at Amazon. Ty, I'm not going to put you on the spot and ask you to comment about this report because we already got a comment from an Amazon spokesperson. But it does talk a little bit about innovation happening at Amazon. I know you guys did this interesting survey with MIT on what AI could mean for workers. Before we get to that, just give our viewers, our listeners, an idea of the role that robotics play right now at Amazon.
Well, first of all, it's a pleasure to be here, and thank you for having me on. I really appreciate it. Boy, I'll tell you, the age of physical AI is here, and it is really proving useful for our customers. We have our robotic systems inside of our fulfillment centers. We've actually just rolled out our next generation fulfillment center down in Louisiana, and we're seeing a lot of returns and gains on that.
Is this the Kiva system that Amazon bought over a decade ago?
It is based on that. That is part of it. What we do is that we have robotics that can move goods. That's part of the Kiva systems, but also robotics that can store goods and sort goods and identify all the various goods. And we have this in this next generation fulfillment center where we have 10 times the amount of robotics that we've ever had under one roof. And we're already seeing that we can process those orders 25% faster and also pass them on to a lower cost to our customers. So
just so we understand, when we order something on Amazon using the app or using the browser, right, does a robot now pick that item at a fulfillment center, or is it still a human being?
Yeah, it's an amazing series of events that actually happens when you go on Amazon.com. You're getting your holiday order ready. We of course want to have the world's largest selection of goods for our customers. We want to process that at a low cost and then have the ultimate in customer convenience. And robotics is helping all along that way, right? So people and machines working together. We have AI systems that source put the right products in the right area so that can be closer to our customers. That helps on our delivery times. We have robots that move safely around people, that we inbound those goods into our buildings, where we can take on more goods, put more goods in the same footprint as we've had as compared to our manual buildings. We can store actually 40% more goods. And then we have robotic systems that help sort and even package those items for our customers. All this is so that we can just have the ultimate in customer convenience and get the right good right to the customer's door.
Ty, what is a 2024 robotics system? And how is that different than the systems that we saw 10, 15 years ago? I'm just thinking about how I used to watch that show, How It's Made, and it would show factories, and there were always robots working in the factories and moving things along a conveyor belt. So what is so different about, the 2024 robotics? That's
such a great question. We have really seen just huge advancements over the last few years when it comes to robotics. It's why we call it physical AI. It's really the embodiment of adaptive behavior in our robotic systems. But our robotic systems shouldn't be viewed as singular and as alone as just machines. Instead, what we do is we build our machines to extend human capability. We build our machines to augment folks to do their jobs better and create a safer environment for them. We've seen those benefits in the last 4 years with regards to safety and also in regards to the efficiencies and the productivities. But the big, I could talk about more and more of the robotics that we've seen, but we also have to, I think the big mindset is when you reframe your relationship with machines.
Yeah.
People first attitude towards of how we build those machines, that allows people to do more. And now we are upskilling. We put $1.2 billion into an upskilling pledge for our employees. And then we as Tim said, we funded this independent study with MIT in order to understand the perception of technology and how people adopt machines and AI into their work environment.
So let's talk a little bit about that, because I think you hit on a really important point here. And it's the idea that, and I was kind of joking about this a little while ago. I was like, can these robots be programmed to love? But the fact is you do have to be comfortable being around automated things that could look like humanoids. They might not look like humanoid robots. What did you find through this collaboration with MIT about how people want to interact or need to learn how to interact with machines?
It was a fascinating study. It was actually groundbreaking. MIT enlisted Ipsos to survey more than 9,000 people across 9 different countries to understand how they perceive technology, because perception is really important to adoption, even to innovation, right? As I said, we put people at the center of the robotics universe. We really want to understand how people, and if they will, adopt technologies. And broadly, we found, or the study found, that a majority of people see robotics having a positive impact on their pay and on their career. And there's three key findings that came along with that. First of all, if people are asked to work at a higher level and can focus on higher order tasking, then they're more keen to adopt technology, and they're more optimistic when it comes to the use of the technology for their own career goals and their own pay. The second is if they felt valued by their employer. Right, so being valued is both are you working in a safe environment, and do you have a great benefits and pay? And at Amazon, we're really proud of the benefits and pay that we offer our employees, and also through automation, we're actually reducing the number of recordable injuries significantly over the past 4 years. And then the last part is really those that want to learn more and take control of their career. So if they want to learn and grow in their career, they're more optimistic for technologies. And that was really good news for us as we put in $1.2 billion into upskilling our employees. So they're good signals, but we're not done yet, because this is across many, many workers and across many industries. And we're going to follow on this study with actually a survey of our Amazon employees directly, because we're always interested in the voice of our customer, the voice of our employees, and we always want to make this a safer, more productive environment.
What's a takeaway that you had from the survey about how you're going to either design or implement robotics across Amazon? Like, what's one actionable thing you took away from this?
Well, the first action that we had is that we actually want to fund more studies. We want to fund the study particularly for Amazon employees, so we can hear directly from them of their perception and how robotics is really augmenting and extending the capabilities. So we are the voice of the customer is our first actual takeaway that we had from the study. The second is really validation of our philosophy of putting people at the center of the robotics universe, right? It's this validation of augmentation and extension and allowing people to do what they do well. Thinking with common sense and reasoning and really understanding the problem at hand. People do this amazingly well. So our job as roboticists is to complement that amazing skill that our employees have, that people have, with machines that can be better designed. So very concretely, for example, we have a robot called Proteus that is free roaming inside of our fulfillment centers that moves goods on demand. And it understands where people want to be, and people can look at the robot and understand what the intent of that robot is. So its job is to move these vessels of goods to our dock doors safely, and it's fully around people. Right. So the concrete actionable thing is that we are getting this really strong validation that by extending and augmenting human capability, not only can we be more productive, but we can also create a safer environment.
We don't have a ton of time left, but I'm curious, when you talk to Amazon employees, what are some of the biggest concerns that they have when it comes to robotics in action?
Yeah, well, we always think about the voice of the customer first and foremost. It is one thing in order to do like a robotic system in your lab and convince yourself that it's going to work in the lab. But when we roll out what we call our alpha and beta deployments with our customers, we get firsthand their quotes of what is working and what is not working. We should build our machines so that you can reasonably and tangibly use the machine in very intuitive ways, right? You shouldn't have to have 18 degrees in order to figure out how to use the machines. And we get that feedback quite often to say it needs to be simpler, it needs to be less complex, and it needs to have the utility in order to extend and complement human creativity.
We're gonna have to leave it there, Ty. Do appreciate you joining us, Ty Brady, Chief Technologist for Robotics over at Amazon, joining us this afternoon from Boston. Emily, this is a real thing, is to try to like understand how humans are going to interact with these things, because that changes how we work.
I would be a little afraid of a robot, but if it was doing tasks that I didn't feel like doing, then I would be friends with it. Then I would really like it.
Do the dishes.
Like, I'd be very nice to it. Yeah.
I get that. This is Bloomberg Businessweek.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. Less than 20 minutes to go until the closing bell. Once again, the equity market is open. Bond market, not so much on this 2024 Veterans Day. Here in New York, Emily Graffeo and I, right now, we're joined by Greg Halter. He's Director of Research at the Carnegie Investment Council. For our Drive to the Close, Carnegie has about $4 billion in assets under management. Greg, good to have you back with us. How are you?
I'm doing fine, and thanks for having me back again.
Yeah, we love it when you join us. Hey, we haven't actually talked to you in quite a bit of time, but the real thing I wanted to ask you about first was the election. And if Trump being elected to a second term changes at all your thesis. Look what we've seen with equity markets. Look what we've seen with crypto just in the last 4 days. It's pretty remarkable.
It's definitely remarkable, although if you look back at history, in cases where you have a unified government, one party or the other, the equity markets tend to do well leading up into the inauguration. And we're also in a very good seasonal part of the year, November being, I think, the best month. So we've got a few good things going for us. Maybe the election there is just, I don't want to say just an election, but it kind of fits the pattern of what we've seen historically. Again, the numbers, there's not that many observations, but the ones that there are generally show positive.
What about when it comes to what you're seeing in the bond markets? I know Tim said the bonds are closed.
Except for today.
Today, but, there has been a rise in rates since Trump won the presidency. It reversed a little bit, but overall, I've been hearing a lot of people say that Trump's policies are going to reignite inflation and yields are going to go up. What do you make of that?
Well, I think you go back to the couple of days before the 50 basis point cut, and that's actually was the low. And we've seen, at least on the 10-year, probably 70 basis points of increase since then, dropped maybe 20 basis points here recently. So I don't think this is due to the election, this most recent move. And I think it has to do less with inflation and more with the growth expectations, and maybe the market sniffed this out.
Greg, what do you make of what's going on in crypto? This is not in your notes, so you don't write about crypto at all in your notes, but we can't ignore it today. We heard the numbers from Charlie a little earlier, but they're worth repeating. Bitcoin up another 9% today, 87,000 for the first time ever. Market cap of $1.7 trillion. Are traditional investment managers ignoring Bitcoin at their peril?
Well, they certainly have, if you look at the past 10 years with great volatility. But I think what you're seeing now is the potential for less regulation from the new administration, maybe some sort of stockpile of Bitcoin by the US, potentially, maybe some central banks buying there as well. And one point, whatever trillion you mentioned is really peanuts relative to the assets of equities and bonds and other areas, other investment classes, if you will, out there. So it is small. There's huge potential here. I've heard some talk about 90,000 as being the next point. We're almost there as of today. So it's definitely been on fire, if you will, broke through the level of the 70,000 or so, and it's been off to the races.
We might get there by the time we're done talking, given what's happened today. Hey, you hit on something really interesting, and I've been thinking a lot about it because a general theme that has emerged is less regulation, less regulation, less regulation. And that's something that Cathie Wood spoke to me about last week. But at the same time, I wonder if there's this balance that may need to exist when it comes to regulation. And yes, investors certainly cheer when regulation kind of loosens, but I think we have to remember that regulations are there for a reason. There's a reason that we're required to wear seatbelts, for example, in cars. And I'm wondering if we get to a point where it's a risk that a lot of regulations get rolled back.
Great question. And I think there's good regulation and there's over-regulation. I believe Jamie Dimon mentioned this not too long ago, and hence you've seen the stock price there do very well last week. At what point is the over-regulation? That obviously is a point of contention. I think a lot of times you get fiefdoms, governmental fiefdoms or whatever, and there's too many hands in the kitchen, if you will. Look at bank regulation. You've got OCC and FDIC and the Fed and then the states. And I used to be a Federal Reserve Bank examiner, and do we need all these entities when they're all protecting the safety and soundness of the banks? Meanwhile, private equity and private loans have really taken over a lot of the work that the banks used to do. So you could see why Jamie Dimon made those comments. So again, there's good regulation like seatbelts, and there's over-regulation. And where is that? Obviously, that's in the eye of the beholder and the people that run the companies as well. So it's a tough one, and obviously there'll be winners and there'll be losers here. That remains to be seen for sure.
Greg, talk a little bit about the energy sector and what your outlook is for energy, particularly under Trump, because you made a lot of notes in your notes to us on that, and I want to hear your thoughts.
Sure. I mean, if you're talking drill, baby, drill, drill, that's good in terms of production. We're at 13.5 million barrels a day, I believe. How much higher can we go? And if we do go higher for both the oil and natural gas, how are you going to handle all this? And actually, that could mean lower prices for the price of the commodity, which again is good for the consumer, good for the corporations that are using natural gas and energy for transportation and fuel and so forth and power. But it's not so good for the companies. So again, you have these balancing acts here. And one thing I would say, about all this rhetoric, no one really knows how this is going to play out. For every action, there's some sort of other side of that, which we don't know. If anyone thinks they can predict, that I think is pure folly. So we'll just have to see how these things play out. The energy companies have been very good in terms of controlling their spending, their CapEx, and their costs. And it's obviously helped them from the standpoint of cash flows and reducing debt. The stock prices haven't done so well, except for companies like Kinder Morgan, Energy Transport, Texas Pacific Land. Those stocks have done fabulous, but that may be more due to the energy needs in this country due to AI and the whole grid and so forth. So again, there's all kinds of reactions that you may not expect. And who would ever thought utilities and pipeline companies would be doing as well as they have over the last 6 months in the market?
Greg Halter, Director of Research at the Carnegie Investment Council, about $4 billion in assets under management.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.